Boom. And we're live. Live from BlackRock. What's up, sons? It's Blind Ride with Son of a Tech once again, and welcome to yet another episode of the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. I go by Blind Run on the internet and Matthew in real life, and today we are going to be talking about Bitcoin hitting a whopping $45,000 by the end of 2023. At least that's what some people think. We'll talk about what I think about it here. We're also going to be talking about quite a few other things, but let me check the mic settings real quick because it does appear that it decided to reset itself once again because Wavelink is kind of bad about that. So I want to make sure we get that tuned down back to where it is. Perfect. Now we won't have any crackling for the stream. All right. So other than that, we're going to be talking about the Federal Reserve raising interest rates to 1/4 point. JP Morgan says the biggest risk to the market in 2023 is no recession at all. And Core Scientific is going to be hand crypto mining rigs to NYDIG to extinguish $38.6 million in debt. Bitcoin miner TerraWolf restructures their debt. And Luxor, on the other hand, is looking pretty good as they start its first-of-a-kind Bitcoin mining rig marketplace for large-scale orders. We also have new miner releases from Team Black Miner, as well as from XM Rig, BZ Miner, and SRB Miner. Then we'll be talking a little bit about one of my NFT projects. We are going to be looking at mining profitability for GPUs, utilizing the new website that actually stays up to date, seeing like every other time we get into a bear market, people just stop working on crypto, which I guess I understand because obviously we have to do things like take day jobs. And that means, of course, websites and projects seem to fall off the bus in the bear market, and one of those does feel like it is like what to mine at this point. We'll get into all that and more after a word from today's sponsor. Today's sponsor is CoinLedger. CoinLedger understands that crypto tax reporting can be difficult and is here to help. CoinLedger integrates with popular crypto applications and exchanges like Coinbase and MetaMask. Seamlessly import your CoinLedger tax reports into TurboTax and feel at ease. For a limited time, check the description on this video for a chance to win a free CoinLedger tax report. Get started for free today at coinledger.io by following the links in the description. Use promo code SONOFATECH for 10% off. And welcome back, ladies and gentlemen, boys and girls. Let's pop into it. First things first, we're going to be talking about the Federal Reserve raising the interest rates 1/4 point. Of course, this is the lowest since, the recession kind of started, or I suppose like the recession that's not referred to as a recession, the economic downturn that's not an economic downturn according to whoever's in charge of the government at the time. However you want to slice that cookie, whatever. It's the lowest since this whole debacle began. But the Federal Reserve met today and announced yet another hike, raising interest rates 1/4 point. The meeting saw the Fed execute its lowest interest rate hike since March of last year, slowing down its aggressive tightening over the course of 2022. Fed Chair Jerome Powell was expected to slow hikes at today's meeting as it maintains vigilance against inflation. Still, the reduction in the size of the hike marks a welcome change to the consistent increases that have been the norm. So following a 0.5% point hike in December, the Federal Reserve has raised interest rates 1/4 point today. The decision marks a noticeable slowdown in the Fed's battle against inflation and is their smallest increase in almost a year. Prior to the announcement, CNBC noted that the meeting was expected to be relatively uneventful, but would challenge Powell's ability to temper expectations. The markets have been rising as investors expect the central bank might succeed in a soft landing for the economy while also snuffing out inflation sufficiently to move back to easing policy. Today's 0.25% interest rate hikes represented the Fed's 8th increase since March. Moreover, it puts the Fed fund target range at 4.5% to 4.75%, a mere half percentage point off from the terminal rate range of 5% to 5.25%. Still, if the market reaction sparks a rise that is too quick, it could have a counterintuitive effect on the Federal Reserve's actions to combat inflation. Following the start of the Federal Reserve two-day meeting on Tuesday, stocks rallied. Overall, the technology sector was up 9% for the month, with rates falling since the start of 2023. Moreover, CNBC noted that the 10-year Treasury yield stands at around 3.5%, following a 3.9% mark at the end of December. So, obviously, rates going up. Give me a second. Make sure that these kiddos are doing what they're supposed to be doing. All right, sorry about that, everybody. Trying to juggle too many things, and frankly, I don't even think I'm going to be able to have time to do YouTube anymore. It's just not working. All right, so the big news here, like we were talking about on the at the beginning of the stream, is the Bitcoin price could reach 45K by Christmas. I don't think this is accurate, and I would say that it probably won't. In fact, I have very, very low confidence in this. If this were to happen, we would break the halving cycle pretty heftily, which means we would go into basically a potentially a possibility of a super cycle, which I suppose could be, but history tells me that this is just, high hopes. There is one factor that may play into this that I would say would be outside of my sight, right? Which would be energy prices, right? So as we know, with cryptocurrency, with Bitcoin mining in particular, the price to mint a Bitcoin does influence the price that Bitcoin is, right? And that could end up with a huge increase, the huge increases we see in the price of energy influencing the price of Bitcoin to go higher. Could it be double, 200% as far as the price to mint a Bitcoin over what it is currently over the year? I guess potentially, but then economically, we're going to be suffering pretty heftily on the energy front. So a $45,000 Bitcoin isn't going to sound that good when your energy prices have gone up 200 to 300% for the second year in a row, right? Like, it's just not going to be a good report, right? Other than that, if that is not the case and energy does not flow in that manner of increasing in cost that much, but the price of Bitcoin goes up and we outside of the traditional halving cycle of Bitcoin, then I would say, okay, at this point, well, maybe we've broken out of the traditional halving cycle. When Bitcoin's performance is positive in January is their argument, the rally tends to continue through the end of the year, the report said. U.S. institutions have probably been behind January's rally in Bitcoin when the cryptocurrency gained more than 38%. An outperformance this early in the year tends to be bullish for the token's price. Crypto services provider Matrix Port said in a research report Wednesday. In 5 of the 6 years that Bitcoin has rallied in January, the cryptocurrency has ended the year with positive returns. On average, the gain the rest of the year has been more than 245%, wrote Marcus Thielen, head of research. The only year when Bitcoin declined after a strong January was 2014. That's only 2 cycles. I mean, this report's stupid. Sorry. I just, I can't. The only year that this didn't happen was in 2014. It was because 2014 was on the halving cycle. It was influenced by that. So we're more akin to right now repeating the halving cycle of 2014, I suppose, than the one of 2018. Sure. But their arguments are unfounded, really don't hold any water at all, especially if you compare it to 2014, which is the only other time it didn't go up if it went up in January. Is like saying, oh, but really the halving cycle is correct and we're wrong. If they understood anything about Bitcoin in the first place. It's stupid. JP Morgan says biggest risk to the market in 2023 is no recession at all. So basically, it's not going to happen. You know what I mean? Markets Insider reported JP Morgan strategist Mike Bell stating that the biggest risk to the market in 2023 is if there is no recession after all. As the economy has feared a recessionary state in the U.S., the actions of the Federal Reserve could negatively impact how the economy reacts. Bell has stated that without a recession, current wage growth could force the Fed to raise rates more than expected. The action would be an attempt to combat inflation, which would lead both stocks and bonds to decline without rate cuts. The current economic state of the United States is certainly a fragile one. Many are fearing for the worst and preparing for such, as the economy reels following Federal Reserve interest rate hikes throughout 2022. Yet JP Morgan strategist Mike Bell has stated that the greatest danger to the market in 2023 is no recession at all. Bell's statements are rooted in a reality of possibly forcing the Fed to remain hawkish. The Fed has been raising interest rates since March of 2022, leading many to brace for a recession, as abundant data shows prices cooling off as the tight monetary policy slows the economy. Conversely, S&P 500 and the Nasdaq are all up. Subsequently, the Fed will begin reversing its tightening campaign in response to an economic downturn. Yet, Bell believes that if the U.S. economy avoids a recession and wage growth remains high, then the Fed would not cut rates as expected and instead would have to resume rate hikes in the second half of the year, he told Bloomberg TV. Additionally, stating, unfortunately, at that point, you're back into a world where both bonds and stocks would go down together. JP Morgan's best case assumes a recessionary action in 2023, allowing wage pressures to moderate and the Fed to cut rates in 2024, according to Bell. Specifically noting, my best guess is that the Fed is going to bring rates down to about 2.5% by the end of 2024. It means we'd have 2 years, of course, give or take, right? From this point forward, we got interest rates back down, but we haven't even started bringing interest rates back down, right? So that's the influence of, like we were talking about earlier, the 0.25% as opposed to 0% or going in the reverse direction. We haven't even started reversing that at this point. Now, as far as the statements of not going into a recession at all, I hear what they're saying, and as far as like, you know, what Mike Bell has to say here, I tend to say that I don't know near as much as anybody else on the economy, so I tend to listen. However, I'm not necessarily sure that it's well, how do we put this? So a risk to the market does not mean a risk to the general public, meaning, as you can tell when they start talking specifically about wages is where this really comes in. Meaning, I think the reason the recession would hit the market is that, or would hurt the market, or not going into recession would hurt the market, would mean that wage pressures would be rising to a rate to where you're hurting the actual companies to a certain extent, but the day-to-day life of the individuals working for those companies would tend to be better. Meaning, the way I read this is, the biggest risk to the market in 2023 is no recession at all, but the biggest risk to the individual is a recession. I'd like to hear your thoughts and opinions, of course, in the comment section below, and of course, the live chat, because I can always be incorrect there. Core Scientific to hand crypto mining rigs to NYDIG to extinguish $38.6 million in debt. NYDIG had previously said it would object to a $70 million life loan for Core if its own deal wasn't finalized. Core Scientific will hand over about 18% of its crypto mining rigs, or 27,403 machines, to lender NYDIG in exchange for extinguishing $38.6 million in debt, according to a February 2nd filing with the bankruptcy court for the Southern District of Texas. Core, which as of the end of December 22, operated 153,000 machines for its self-mining operations, filed for Chapter 11 bankruptcy protection late last year. The NYDIG deal has yet to be approved by the bankruptcy court judge. The bear market in crypto has taken a toll on the mining industry, particularly on leveraged firms, as high energy prices coupled with a low Bitcoin price have led to consolidation and capitulation. So I go back to this, which is my argument here would be, if we're going to go into a situation where Bitcoin hits $45,000 by the end of the year, that is purely due to the price to mint a Bitcoin will be $45,000. In which case, we're really still basing it off of energy, and we haven't broken the halving cycle, right? And that's what I would postulate. If you had any hope of hitting 45,000, and then really, like, we kind of go back into this. I asked this question on Twitter, right? Because, like, a lot of people that are, like, bullish on Bitcoin that are... it's very odd. I always ask this, like, why are all the Bitcoin maxis buying Bitcoin and not buying miners, right? It's very odd. Welcome to the stream, DJ Minds. Make sure you guys go follow and subscribe to DJ Minds. There you go. But I always have this question, and it really comes down to, I think, an unpredictable energy market, right? If you look at it completely objectively, there is always a risk that you run, I suppose, if you're mining at scale, right? You always have, like, basically energy as your number one risk factor, right? Because once you mine at scale, like, if you are mining, okay. So if you're, like, mining, like, on your farm and you have a little solar and you're like, oh, I got solar, I don't have to worry. That's fine. I'm talking about at scale. We're talking about the big boys when they have to be connected to the grid to a certain extent, when they have certain regulations that are impending on them, which is usually, like, once you get over a certain amount of megawatts, that's going to be the factor that we get into, which is where then we get into the biggest risk for a lot of these large mining firms is the unpredictability of the energy market, right? Okay, so the bear market in crypto has taken a toll. We got into that, and here we go. So the agreement will bring substantial benefits because the value of the machines, and this is for borrowing the $77 million from New York Dig to buy mining equipment, but essentially stopped paying off the loan since the end of the third quarter. The agreement will bring substantial benefits because the value of the machines is lower than the outstanding principal, and the machines are no longer needed for its operations, Core said in the filing. Prices for Bitcoin mining rigs have dropped about 85% in the last year, according to data from Luxor Technologies. On January 31st, Core agreed to borrow $70 million from the investment bank B. Riley. On February 1st, NYDIG filed a reservation of rights letter with the court saying it might object to the financing if Core didn't finalize an agreement over its own debt. The lender has previously argued that it isn't well protected against the diminution. Actually, don't know this word, so let's go look at this up. I don't even know if I said that right. Diminution. Reduction. Okay, cool.
Diminution.
There we go. Diminution of the value of the machines under the post-bankruptcy financing agreements. About 60% of the machines posted as collateral for NYDIG loans are Bitmain Antminer S19s, an older model, whereas around the rest are newer Antminer S19J Pros. Earlier in 2023, Core moved to reject its hosting contracts with Celsius Mining, which is also bankrupt. And more debt restructuring, except in a different manner, comes from TeraWulf. Obviously, what we're seeing, of course, is a bunch of restructuring. M&A, obviously, mergers, acquisitions, complete bankruptcies. All this stuff is going to go on in the mining industry until pretty much until the next halving, right? Once once all the mergers and acquisitions and bankruptcies, etc., have been, finalized, I think once that happens is where we'll start to see the market really stabilize before we get into the next bull run. That would be how I would see it, right? A slew of mining firms have restructured their debt loads while others are facing bankruptcy. TeraWulf is the latest Bitcoin miner to restructure its debt obligations in order to stave off negative cash flow. Miners such as Bitfarms and Greenridge Generation have paid down or restructured their debt as the bear market, coupled with high energy prices over the last few months, have taken a toll on the industry. Some of those that haven't been able to restructure have started Chapter 11 bankruptcy procedures, sold assets, or faced margin calls. Obviously, not dissimilar to like what is happening with Core Scientific. Core Scientific. Under the restructuring signed on January 27th, amortization of the term loan will be replaced with a free cash flow sweep mechanism through April of 2024, according to a Wednesday press release. TeraWulf will also be able to extend the maturity date of its term loan to April 2024, as long as it manages to raise an undisclosed requisite amount of equity proceeds by March 15, 2023. On Wednesday, the mining firm announced a public offering of common stock, which it priced calling for gross proceeds of $25 million. The offering is expected to close on or about February 6th, subject to customary closing conditions. At the end of the third quarter of 2022, TeraWulf had $138.5 million of principal outstanding on the term loan. Its biggest mining facility is a 60 megawatt site in New York. TeraWulf stock was down about 32% on Wednesday as of the time of writing. TeraWulf is one of the most indebted publicly listed miners, according to data analyzed by CoinDesk in June. The miner's cash reserves were running low in the third quarter. TeraWulf has also raised $6.75 million in equity in the past several months. The two co-founders, Chief Executive Officer Paul Prager and Chief Operating Officer Nazar Khan, bought $2.5 million in TeraWulf stocks for $1.05 per share in a private placement, adding to the $15 million they have already invested in the company. They have also received approximately $4.25 million in proceeds from the exercise of a certain private placement warrants issued in December of 2022, according to the press release. So, obviously, with the restructuring of the debt, they're hoping to stay alive. If they're already this bad on the books, though, I wouldn't expect them to be able to fully pull this off, but, it'll be impressive if they do, especially with the stock declining by 32%. But, respect where respect is due. They are putting their money where their mouth is, meaning you do have the CEO and the COO personally staked into this by purchasing and buying up their stocks. Still, that's usually not a good sign for a company in general. Luxor starts first of its kind Bitcoin mining rig marketplace for large-scale orders. Now, this is the kind of building you kind of want to see from these companies, Bitcoin mining companies, in the bear market, where they're able to do some innovative stuff. Innovation in the bear market is next to nil, right? Like talking about it earlier, a lot of the tools that we use, a lot of the miners that we use, a lot of the operating systems that we use for this entire industry all of a sudden just start disappearing, right? If you look at like minor releases, we're getting very few and far between. The giants that used to be are no longer, right? The giants during ETH mining are going the way of the dinosaur or disappearing completely. We saw this with Phoenix Miner previous cycle. And we're kind of starting to see that with some previously, more developed miners this cycle. I'll hold who I think is going to quit developing until we really get into the next cycle. I can tell you that there are a few impressive ones that continue to be innovating and adding new support. Right now, off the top of my head, BZ Miner and LOL Miner seem to be doing very good in this manner. But then there's also like, pools that are closing down, all that sort of stuff. And that's kind of par for the course on any halving. So I wouldn't say that it is purely due to the move of Ethereum to proof of stake, despite what, I think the larger consensus would like to tell you. It does appear that there seems to be this complete blindness to the halving cycle by a majority of spectators, I suppose, retail investors. That is quite concerning because it is so clear and blatant that they still, and I don't know if it's an actual, like, they literally don't have any knowledge of it, or if it's more of a hopium thing where it's like, well, yeah, there is the halving cycle, but really I think what affected is ABC or XYZ. And it seems like that's kind of like the way it is, where it's like, this whole talk of like a 45K, it's like we're going to completely ignore, historical data on the halving and how that affects the price of Bitcoin, and say that, base it off of this other metric, which is if the price is up in January, it'll be up by 200% by December. It's like, no, because even in your own statement here, you said that that the only other time that it's gone down was in 2014, which is part of the halving cycle. So you completely like disprove your own theory right there, which is quite wild. And then like when we look at like a lot of people on the mining front, especially GPU mining, GPU mining's dead. We're going to sell all of our GPUs. And look, there can be arguments for that. But on the upside, what I would tell you guys is that this isn't really any different to the last halving cycle early on in the bear market, right? I would say that due to energy costs, it might be exacerbated a little bit, but the mining market has been like this before, even on the GPU side, even when Ethereum was still around, right? So that is kind of the positive I would give you there. The market for mining machines is increasingly flooded with inventory from struggling companies. Bitcoin mining services firm Luxor Technologies is starting the industry's first unified marketplace for new mining machines so that buyers and sellers can directly connect through a request for quote system. The crypto mining market is flooded with stock offloaded by struggling companies. The marketplace comes when thousands of discontinued machines have further overwhelmed an already inundated market. In 2022, the industry did not have enough infrastructure to plug machines into and start bringing in revenue, so hundreds of thousands of machines were left unused. As the bear market hit the sector, miners started selling more machines, further depressing the prices. The price of mining rigs has dropped about 85% in the past year from Luxor data. In the new platform, buyers and sellers can create requests for machines in an open bid system and directly negotiate prices. Currently, the market operates primarily through brokers, including Luxor. That is an opaque and regionally fragmented market, end quote, that Luxor's RFQ system will unify, thereby improving price discovery and increasing liquidity in the secondary market, the firm said in a Wednesday press release. Obviously, this is pretty cool. Now, Compass Mining also aggregates listings for mining rigs on sale on a separate platform. However, the volume is small, with listings mostly ranging between 1 to 10 machines. And that's because really what Compass Mining did is quite different than what Luxor Mining does as far as their target demographic. And if you've talked to either one of the companies, that becomes very obvious. Like, it became obvious to me that Luxor was a little bit different when I met them at up in Wisconsin, and as well as at the crypto mining conference. Whereas, like, when you talk about, like, how Compass's business model, which is basically selling machines and hosting machines to individuals, puts it at a much lower throughput. And so, I mean, that is going to be advantageous for individual miners, like smaller miners like myself or something like that. If I'm just trying to build out myself, maybe Compass Mining is the way to go to find these rigs to buy on, for cheap between 1 to 10 machines. But if you're really trying to stand up like large farms with like, one to even like, let's say small large farms. I don't know how you put that. Large investment, smaller farms like 1 to 5 megawatts, that sort of thing, where you want to be buying, you know, hundreds of machines. This sounds like it's going to be a big deal, right? It does say that Luxor will take a commission from the party that responds to the request, whether as a seller or a buyer, which will also encourage market making on the platform, said Colin Harper, there we go, head of content and research at Luxor. About $1.6 million worth of deals have closed so far on the first day of the platform's operation. Bankruptcies of giants in the space, including Celsius Mining and Core Scientific, could mean more mining rigs for sale. Before, buyers and sellers relied on a patchwork of venues to buy and sell mining hardware. Now they can observe offers, listings, and settlement prices all in one place, which improves pricing transparency and expedites the mining hardware procurement process, Luxor Operations Manager Lauren Lynn said in the press release. Now, I think this is much needed for sure, especially like right now. If you want to purchase, like, even, I mean, I would like to see one that is more obviously for, look, I get it. Like, buying these things in bulk is going to get you an advantage in general. But like I've said in the past, like the biggest downside for me when we get into like ASIC mining versus GPU mining is that at this point, mining feels like you price out the little guy. And the thing is that mining was the best opportunity to basically start practicing the basics of investing in essentially assets and generating revenue off of those assets at a much smaller level, right? Whereas if you want to get into anything else, you want to get into like hedge funds, you want to get into, I mean, like obviously real estate, something along those lines, the barrier to entry is much higher, right? And now it is starting to feel like the barrier to entry is much higher in mining, right? Even if we got into the argument of, well, you can buy some used ASICs for, pretty cheap, or you can buy the latest, greatest, Bitcoin mining ASIC for $4,000. Yeah, you can buy that for $4,000, but your ROI is still over 1,000 days, right? So you almost have to do it at scale. And that makes it very difficult. It's not like going and purchasing an RX 580 for $200 and starting to mine on that and buying a second one and a third one and a fourth one and a fifth one. It's not like it used to be. I don't know that for sure we'll never go back to that, right? But it definitely feels like we could possibly not go back to that. Whereas like, where's the lights at the end of the tunnels? There's the Flux, right? That will remain GPU mineable. Obviously, with proof of useful work on the way, the way in which you do that will be changed significantly, meaning that you are going to have to start worrying about PCIe lanes, right? And that's been pretty much confirmed by Daniel. So even if it does end up being Flux, my point would be is that your barrier to entry will still be higher due to proof of useful work requiring higher end parts beyond just the GPUs, right? We're talking about needing Threadrippers now to run all of the GPUs, We're not talking about Celeron dual core processors with 8x1 PCIe lanes. We're talking about, Threadripper on by 8 PCI lanes needing, and then running 4 of them and having to buy like basically for every 4 having to buy another Threadripper motherboard. So it's going to be a little different if it goes the Flux route. Just heads up there. If you go the Ergo route and that starts to pump because there becomes issues within the smart contract systems that are currently proof of stake, then that could be a possibility. The only reason I have doubt there in particular is specifically due to the fact that there is a pretty close relationship between Cardano and Ergo, and I'm not exactly sure why, and I'm just kind of curious where that goes from a competitive standpoint. Especially with the whole weird trade between Hoskinson and the Ethereum Classic Foundation Twitter. There's stuff there that seems to be clouded in mystery that I'm not really certain of. Meaning, if the statement is Ergo's the only ground up, right? Because this is what I say. Ergo's the only ground up proof of work competitor to Ethereum, right? And that by and large part, like, obviously still remains true. It's just how much influence does this proof of stake coin known as Cardano have over it, right? What is that relationship? I hope it's just for Sigma protocols, right? And that's really what it's about. And all Charles is really trying to get out of it is, Sigma protocols. That's what I would hope for. But these are the things that bounce around in my head. And then Gordon says Kaspa will be ASIC and FPGA. So no, it already is FPGA, already ASIC. So no, absolutely not. All right, Team Black Miner version 1.83, faster Vertcoin and ZIL mining. Epoch 0 cached at startup, AMD, NVIDIA in plus ZIL mode, and then improved the startup time when mining 2 or 3 algorithms. Added support for ZIL standalone mining on crazypool.org and fixed stats. Sometimes the AVG hash rate in the console was 0 for VertHash. Added the API version 1.4. Activate with API version option. Fix the AMD ETC standalone mining not starting bug introduced in non-dual mode 1.82. And fix ZIL power limits so it resets properly after end ZIL proof of work. Yeah, good luck with any triple. I mean, even dual mining is pretty sparse as far as how reliable you're going to get your rigs. But once you start triple mining, like, good freaking luck, bro. Just good luck. It's cool on the surface. If you want to be able to run your rigs with any sort of reliability, not a fan. Out of nowhere, an interesting we got an update from XM Rig, which I think has been it's been a while. The last update was October 23rd for version 6.18.1. We got version 6.19 2 days ago. And there's not a lot of information here. So all we really got here is an update to the latest SSE to neon.h. MSVC build enabled parallel compilation, improved Zen 3 MSR mod, which cool. Updated CMake required version to 3.1. Dragonfly BSD compilation fixes, not really too big of a deal. Show IP address for failed connections. Fixed macOS DMI reader, as if anybody mines on macOS at this point, but cool. And fixed the broken random X Lite mode mining. Solo mining added job timeout. Not a lot. It is good to see the XM Rig is getting some updates though. So work is being done there. I was happy to see this. Like we stated earlier, updates to these miners are few and far between in a bear market. I'm glad to see XM Rig is still sticking around because Really, they're the only hope for the CPU mining side of things. XMR stack has been pretty lackluster, to say the least. 4 days ago, too, we got BZ Miner version 13.03. Like I said, BZ Miner's definitely been staying up to date with their fixes. They had one 2 weeks ago. I think that one was for the partnership on Nexa with LOL Miner, which is pretty cool. On this one, the hot fix. So they had quite a few kind of back-to-back fixes, right? They had a 13.01, a 13.0.2, which improved Nexa hash rate and efficiency on NVIDIA, and they reduced the Nexa dev fee by 2%, basically because it was lower on the LOL miner side as well. They fixed AMD issues on all algos except Nexa, it says. And then some stuff like that. Then 13.03, they fixed CUDA error from previous release on older NVIDIA drivers. Slight improvement to Nexa efficiency and hash rate, mainly for 20 series cards. And they added the new parameter pool reconnect timeout, which is pretty cool. And then finally, we do have 4 days ago SRB Miner Multi version 2.1. And this one, SRB Miner, it's been a wait. Well, it says 2 weeks ago. It felt like longer. It felt like longer to me, but I guess I'm wrong. So for this one, exciting here, Alchemist architecture. I got the 750. Also, the price of the 750s dropped in price a lot. So, as well as Ubuntu drivers are out now too, or Linux drivers. So I'm definitely going to get my 750 hooked up at some point, hopefully next weekend. And I want to essentially get the 750 hooked up into Ubuntu machine. I think we'll throw it into my Threadripper that already has Ubuntu installed on it. And then get SRB Miner and check out some of the new algos for the support for Alchemist, right? So I think that's pretty exciting. They do have like the ZIL for the triple mining, all this stuff. I'm not sure. It doesn't say. I mean, so it says this is the first release that supports the Alchemist GPU, so please report any bugs. Is it every algorithm the SRB Miner supports? Because if so, like, crazy. It seems like that's the case though, right? It seems like that's the case. So plus the price drop on the Alchemist cards, and like I said, the Ubuntu release, I'm really hot on this. So this week is like, this is going to be my primary focus. This weekend, I'm too busy with the kids and stuff. But over the week, like, this is my primary focus to get testing for you guys on the Intel Arc 750. So that should be cool. That being said, let's get into... I did release this, guys, if you want to check out in the description. I'm just doing AI art. I'm like injecting rigs that I've built in the past and then messing with them and like having AI art renditions of them. Only one of them is for sale right now, the Doge one. If you guys want to go like bid on it, be my guest. I have it. You can make offers on the other ones if you want. But I am going to be doing a video on this as well to talk about, you know, DALL-E 2. We'll also probably be talking about ChatGPT as it pertains to some other stuff with crypto that I find interesting. But we're going to start with this, kind of like the future of like NFT art. You know, what's the barrier to entry? How easy is it? That sort of thing. Because it is pretty easy to do. And so maybe go over the process and do a how-to if you guys are interested, that sort of thing. I switched mining calculators to hashrate.no because they seem to be updating, guys. So we're not using what to mine anymore. Not only does it have newer GPUs. It also has newer coins like Nexa and DNX. It has the power cost set, and you can sort by profit or revenue or ROI. And so it makes it pretty nice. And then you can kind of see where everything's at. DNX right now on the RTX 3090 is at 71 cents a day after 10 cents a kilowatt hour. And that is primarily due to the amount of memory. So a little bit of an update for everybody that, we talked about it earlier for DNX. DNX runs essentially off of the amount of memory on your GPU. There are also custom, there are custom arguments that you need to add to get around the issue for the 1 GPU per 1 CPU thread issue that I saw a lot of people having. So make sure you go back to the how-to video and make sure you're getting those additional config arguments if that is the issue that you're running into. Now, this is the reason why you have an RTX 3060 up here trading blows with, the A4000s and stuff like that. Why is that? That's because the 3060 has a bunch of memory, right? That 12 gigabytes. Technically, I think even the 3080 12 gigabyte, but the reason it's lower than the 3060 is because it uses more power. There is some more workarounds there. You guys remember what we did with KASPA with locking the memory clock down to 810 megahertz? That works over here for reducing memory even further as well. So look at that for your additional command line arguments too, if you're looking at DNX in particular. And that one's actually saying Nexa right now, but it in theory would be the same as the 3060. So pretty much DNX and Nexa trading blows on the green team across the board. If we get down to the red team, we kind of start to see things that are more traditional, or even 2000 series. We see some more traditional stuff like Cortex here, right? Cortex had that big pump. 6900 XT, 6950, 6000 series. We're starting to see, ETH plus ALF. Alephium, I think I'll have the interview next weekend on the 11th is when I'm scheduled for a dev interview for Alephium. So mark your calendars for that if you're interested in hearing what's going on with them. And then on the RX 5700 XT, kind of out of nowhere, Neoxa is profitable by like a penny. So, you can check that out if you want. And then as far as ASIC miner profitability, the Antminer KA3 is at 48.58 on Kadena, but I don't think those have even shipped yet. You really got to go down to the Antminer L7 for a realistic price, and it is around $21. We've had that pump in Litecoin here recently, which is definitely helping out because you can merge mine both Doge and Litecoin, and it pumps that profitability up on the Antminer L7s or really any script miner. And then you have the Antminer D7, which is doing $7.29 a day on Dash. From there, you got the iPolo G1, which is doing only like 41 cents a day on Grin. If somebody can explain to me why Grin is going for so much on NiceHash, that'd be cool, but I don't trust that, essentially. Then the iPolo V1 doing the easel with Ethereum Fair or Ethereum Proof of Work. Either way, both of those combined with Zilica have been doing pretty well. And I think a lot of that has to do in the Gold Shell HS3 as well. But I think, and that's like 741 a day. Antminer S19 XP Pro. Let's look. S19 Pro. There we go. That we look at every day. $1.63 a day on Digibyte. So it is profitable right now. Pretty cool. Mining pool stats, right? Let's take a look. Bitcoin is up 1.21% over the past 7 days and has dropped some hash rate back down to 291 exahash a second. If we take a look at Ethereum, we have Ethereum Classic up 5.88% over the past 7 days and sitting at 127 terahash a second. we saw these guys kind of pumping. Obviously, Ethereum proof of work and fair, both forks, the latest forks of Ethereum coming off of the move to proof of stake. With I always get it mixed up. One is Justin Sun, one is Chandler Go. They have their reputations in cryptocurrency. Take them for what they will, right? 17% up over the past 7 days on Ethereum proof of work, sitting at 20 terahash a second. Ethereum fair is up 10% over the past 7 days and is sitting at 2.47 terahash a second. Zilliqa is down 0.63% over the past 7 days and still sitting at around that 20 terahash a second. Moving on from there, I don't know why these autofills are all here, but that is fine. Son of a Tech, Bitboy, Crypto, G203, Vosscoin, Red Panda Mining, and Blind Run. There you go. Let's go ahead and take a look at Flux, which has been pumping here, boys. Up 20%. Oh, it was over $1 today, and it dropped back down. Sad face. We got about 14 hours left. Something like that. Definitely less than a day before the halving is complete on Flux. Is it priced in? You know, is this 20% 7-day pump up? You know, is that priced in for the price of Flux? I don't know. I lean on used to I thought halvings across the board would impact the individual prices of cryptocurrencies, and then come to find out as I've been in the industry longer and longer that is never the case. The only halving that really affects anything is the Bitcoin halving, and it affects everything across the board. The rest is kind of speculation. And with the current status of GPU mining, it's quite clear that, at least from what I can tell, the cost of power, the average cost of power to mint a GPU mineable coin doesn't seem to be impacting the price of that coin very much. So, Flux, as far as a GPU mineable coin with a halving, has the best chance of actually being affected. The last one, that we really took a look at that we were thinking might get an effect was Ravencoin, and even during a bull run, Ravencoin really saw no advantage to the halving from a price standpoint, right? So I think that's kind of like where we sit with Flux right now. As far as like, will it go up further or will it not? It's kind of, 20% feels about right, but I don't know. I don't know anything. And then we got Ergo, right? Up 3.17% over the past 7 days and sitting at 30 terahash a second. We got Kaspa down 5.35% over the past 7 days and sitting at 344 terahash a second. And then we got Ravencoin, speaking of the devil, 4.26% over the past 7 days and sitting at 11 terahash a second. And that is gonna did it. My node actually broke because the internet went down. And then it didn't restart, but I think I got it restarted. Yeah. But I am running a node on Ironfish, 132 hours up. I've been down the past few days. Just trying to get my points. I got 110 points. Those will presumably be worth some amount of Ironfish down the line. So, you guys can go host a node if you want to do that. So there you go. Let's get into questions and answers for the day. Remember, super chats are never required, always appreciated. First to be answered. Sorry for my grumpy mood tonight. I'm trying to get by. It just hit me today, and I think I'm kind of I'm hitting my wall lately. I'm not going to lie. But let's get into questions and answers. I love all y'all for being here. We had a $10 super chat from Matt K. Thank you, good sir. It says, what are your reasons for getting into Dynex? Do you believe in the project? No, I don't. It's not a pure spec either because there's an exchange. It's a pretty basic reason it's the most profitable. There's literally nothing beyond that, right? Like, it's the most profitable, and it's profitable enough that I could run some GPUs on it at 13 cents a kilowatt hour and be able to trade for whatever coins I want. So there you go. It's pretty simple. Georgie. Now, I will say, as far as, look, I think there's a lot of misplaced hate on it in the first place. And I do know where that comes from, because it said it was proof of useful work, right? That being said, it's a pretty early project. Let's put it this way. It's a pretty early project. Most of the attacks are unfounded and seem to be purely based off of some sort of weird, it's a how to put it. It seems like people like to join sides in these things, and it doesn't seem to be, I mean, there doesn't seem to be a lot of founded. It's like, oh, this seems sketchy, but it's like, well, what makes it sketchy? Explain it. And then it's like, well, it just looks like, and you're all right, well, cool. Sketchiest thing about it, web wallet requires an email. So far, not a big fan of that. That's okay. You can get around that by running the node. There are instructions to run the node and spin up the wallet on their website. So, there's that. If you don't want to mess with it, and it's because somebody from another project called it out, then just just make sure you consider the source. Okay. I'm not going to be, you guys know that when I see a problem, I call the problem out. If I don't see a problem, I don't have evidence of it, I'm not going to attack for no reason. Is that fair enough? And I feel like we're seeing, like, right now, all I'm seeing is a lot of attacks, right? So I don't I'm not going to participate in that. Once again, the only big thing that I found that I do not like about it is that the web wallet requires an email. Okay. That's it. That's the number one thing. No, don't like it. Also, we crashed the web wallet with our tutorial, so it's obviously has scalability issues right now. At least the web wallet does, right? There you go. I mean, that's pretty much where we're at as far as that's concerned. Let's see. Conflicted says, are you not doing your Ironfish weekly task? No, I just don't have time. I'm lucky enough to get the node up. Crypto 440 says, you can just use a fake email. I said, if you watch the how-to video, I said, I'm aware of that. I still don't think any crypto project should require an email to create a wallet. Plus, there was no private key. There's no private key export yet, from what I could tell. So, go the node route. That's where I'm at as far as that's concerned right now, right? And then I haven't done enough research to find something one way or the other, if that makes sense. So I'm not going to, why am I mining it right now? Why did we bring it up? It's the most profitable, Are there some red flags as far as like with the wallet that I saw? Yes. Are there other ones? Possibly, yeah, but it's hard to, what is it? Separate the. It's hard. It's always hard to separate the shit talk from reality, right? Ted says, Dynex statements just remind me of your buddy's brother who went to MIT and helped develop the DVD drive. Big speak going over the masses' heads. I'm not sure that that's the, I mean, you could, that like, obviously people will mistrust that, right? Because that has also been used, like fake intelligence has been used to scam people in the past. So I completely get it. Yeah, so John Lemon reads it that way, whereas like other people might read it a different way, right? At the end of the day, can you mine it for the most profit and go exchange it on an exchange? Yes. So, look, if you don't want to do it, then don't do it. Like, is there a possibility of you getting scammed if you mine it and hold it? Sure. But nobody ever told you to mine and hold it. So go get mad at somebody else. Right? Like that, I guess that would be my only point. Like if you want to go try to out them, then learn about it and figure out how to prove that they're doing something wrong, right? Which I think is an amazing thing to do. Like if you have the intelligence to go out there, do the research, figure out, what they're doing wrong and prove that they're a scam and that's what you want to do with your time, dude, then bravo. Like, hell yeah. Like, it's like the Zach XBT on Twitter and stuff. Like, I am super down with that, right? But I haven't personally done that work, right? So I don't know. It's on Trade Ogre, which will list a lot of people too. But once again, like John, your arguments don't like. If you want to present valid evidence, then I'm down. If you want to throw shade, I'm just not down for that energy anymore. So, but we do it every Friday, but I only stream once a week. Anyways, if you don't have any more questions, I think we're gonna end it. As far as like Dynex goes, I would never condone mining and holding it or buying it. Right? We are in a trade channel. This isn't financial advice. You know how to mine it. Keep an eye out. If they do something sketchy and I am provided evidence, you guys know I'll tell you about it right away. So I'll tell you when it happens. Know what I mean? I think the worst accusation I heard, which I can't find proof of. Now, you know what? I'm not going to state accusations if I don't have proof of it. We're not going to do that. I'm not. I would like to, but I'm not because I have zero proof of it, so that would be unwise of me. Georgie says, do you know the difference between Ergo versus Kadena? I don't know much of Kadena, but I thought it was proof of work with smart contracts. It is, but it is, so I think earlier when I made the statement, I did forget to say what I actually said in the video about Ergo. GPU mineable, which is important, right? So yeah. Detroit, no local tonight. I have to be up at 6 a.m. I gotta be up at, well, I gotta be up earlier. We gotta leave at like, we have a chess tournament that's over an hour away at 7. So we gotta, yeah, I gotta get up. Like literally, I'm gonna turn off the stream right now and try to crash out. And then we're gonna be gone all day. We have chess tournament and 2 birthday parties. So I'll be out as far as that goes. Sunday, we have another birthday party. So I think Saturday night, a little bit of streaming Saturday night, and a little bit of streaming on Sunday night after 7. Probably play a little bit of Dead Space. I do have like a ton of node work and infrastructure work that needs to be done at the farm, but I am also kind of burnt out. Right now, Dynex, last I heard, is not supporting mining directly to an exchange, so I wouldn't do it. Like the wallet's actually broken. Like because of the privacy portion of it, there's an additional, yeah, you can't do it right now. That's all I know. There's a basically you have to have 2 portions to it. Theodore, thanks for the $20 super chat. Says, love the streams. Keep building through the bear. We'll try to do our best. Make sure you guys go follow or subscribe to Serpent, by the way, as well. I got a dry throat. I'm out, boys. Thanks for watching. I'll see you next Tuesday.